Howdy out there, folks. It's Darius Dale here to present our macro minute for Thursday, March 17th, 2022. Happy St. Patrick's Day out there. And I just realized I forgot to wear green. So, anyway, starting with markets, stocks down this morning, commodities up, crypto down, dollar down, global bond yields down. Big news, we had Kremlin spokesman Dmitry Peskov dismiss reports that Russia and Ukraine are actually moving towards a settlement, blaming the other side, blaming Kiev for slowing the negotiations. We had Pentagon spokesman John Kirby came out and effectively said, look, Russia continues to hammer cities with bombardments and rockets and certainly isn't acting like it wants to settle. And we're obviously seeing the two parties move in a wrong direction this morning. Big movers, WTI likes that, up 5%, nearly 5%. Gold likes it as well, up nearly 1%. MSCI Emerging Markets Index down 1%, not liking that. And then 30-year nominal Treasury yield down 7 basis points with some follow through on the sort of curve flattening that we saw during the Powell press conference yesterday. On the macro front, yesterday's February retail sales data displayed still robust demand for goods in the U.S. economy. The trending rate of change remains delta negative, however, and that dynamic portends a further slowdown in the months ahead as consumers retrench due to unhinged inflation momentum, poor assessments of their financial health, and general exhaustion. Taking it to the chart here, recall that goods consumption, which is this blue line here up top, is still tracking $502 billion north of its pre-pandemic trend. This is the trend line, the 5-year trend line through 2019. And so there's a huge gap here. If we start to slow to the trend, you're going to have obviously an overbuilding of inventories that's associated with a very, very elevated, very robust level of goods consumption. We still have this big deviation from the trend with respect to services consumption as well. And that remains a source of optimism for Bloomberg consensus expectations for growth. Same thing with the Fed's expectations for growth. We're just not so convinced that it's all going to occur in this year. There have been some changes in the economy that will make that return to the trend line from a services consumption perspective less likely to occur over the medium term, certainly relative to consensus expectations. And that is a downside risk to growth and the growth outlook. With respect to unpacking the data, headline retail sales decelerated to 10% on a 3-month annualized basis. That's the lowest print we've seen since December. Control group decelerated to 3.3% on a 3-month annualized basis as well. Yeah, that's the lowest print we've seen since December. So not terribly poor numbers. They're just moving in the wrong direction, and they're moving in the wrong direction with a myriad of headwinds on the medium term horizon. With respect to today's probable range setups, the S&P 500 is bearish from the perspective of our volatility adjusted momentum signal, with minus 9.3% of downside versus 1.4% of upside in its probable range. WTI neutral VAMs minus 14% of downside versus 26% of upside in its range. Bloomberg Dollar Index minus 0.7% of downside versus 1.8% of upside. That's still bullish VAMs there. 10-year Treasury yields also still bullish VAMs with minus 31 basis points of downside versus 18 basis points of upside. Bitcoin still bearish VAMs minus 18% of downside versus only 2% of upside to the upper boundary of its probable range. Ethereum is overbought at the upper boundary of its probable range with minus 21% of downside. That instrument is still bearish from the perspective of our VAM signal. And then lastly, gold is still neutral VAMs, minus 4% of downside versus 5% of upside in its probable range. So with that, Darius Dale presenting our macro minute for Thursday, March 17, 2022. Best of luck out there today.